Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I wish I could say when I come back on Fridays that we have a lot of great things and positive news to talk about in the livestock side of things, but this week is not one of them. Let's go ahead and get started and talk about and wrap up what happened this week in markets.
Yeah, I was trying to decide today whether I'd give you the bad news or the bad news. So we'll just get it all out there as best we can. If we start on the hog side of the equation, cash hog prices down about $2 for the week. When you look at that lean hog current futures contract, it closed down about $7 this week. Certainly trade concerns, I think, put pressure on futures markets for all livestock products. When you look at the pork side of the equation, the pork cutout value was down nearly $2 this week. That makes it 10% below year-ago levels at this point in time, and that was really driven by both lower hams and belly prices. We did see belly prices below $1 for the first time in several weeks, and that puts them about 23-24% below a year ago at this point in time. So all in all, not a lot of good news on the hog side. Similarly on the cattle, if we look at cash cattle prices, also down about $2 for the week. When we look at feeder cattle prices, we were down about $2 to $6 this week as well. On the future side there, CME live cattle future current contract closed down 6, while that CME current feeder cattle contract was down nearly $5. On the beef side of the equation, the choice beef cutout was virtually flat this week. So maybe a little better news there with that beef choice cutout value staying right at where it was a year ago at this time.
When we look at the hog side of things, Scott, how much is the uncertainty in trade talks, and we're going to talk a lot more about that and get more in depth into that a little bit later, but how much is that coming into play as we look at the continued slide on the hog side of things?
I think that there's a lot at play as a result of that. I think when you look at just the growth in supplies of pork that we have, as well as all these fears about what happens on the trade front, it's nothing but continuing to put pressure on where those hog futures in particular have been going of late.
Does it mean that this is not the bottom and we could continue to see a slide?
Yeah, I think unfortunately, if the news continues to unravel in terms of trade, I think it just adds to what could be lower prices as we look ahead. And as we've talked about for a while, when you see where we are in terms of that pork cutout value, it tells me we just have more pressure coming. So even though we got more slaughter capacity and maybe are willing to pay a little more for hogs, it's been tough to move that pork.
We had a slew of reports from the USDA this week. Let's start first and take a look at that cold storage report coming out earlier in the week. Are we still worried at the fact that we're seeing, especially as we look at those levels of pork and chicken?
Absolutely. You look at what we got with pork stocks now up 8% or a little more than 8% relative to a year ago, and chicken up 15%. Those supplies are continuing to I think increase in terms of freezer space that we have. So again, I think we're starting to see some signs of getting tough to move some of those products now. On the flip side of that, you look at beef, and we're down about 8% relative to where we were a year ago. Again, it tells me there's a little different picture going on in beef versus pork at this point in time. But one of the things that we've watched for a long time is when we're going to see freezer stocks build. And, you even look at pork bellies that we're now talking about nearing 50,000 pounds. We haven't seen that kind of belly inventory for quite a while. So very different situation than where we were a year ago at this time.
Livestock Slaughter also came out this week, Scott. As we take a look at that, one of the things we're keeping an eye on is weights of both cattle and hogs.
Yeah, absolutely. When you look at what we got out of the report, we have both those weights now running above a year ago. Hog slaughter weights about 2 pounds above a year ago, while we got cattle weights up about 5 pounds. All we're really doing there is, even though we got more animals, now we're just going to compound that a little bit with additional weights. I worry as we continue to move forward in 2018, we're going to see more of that weight growth as we look ahead. And I don't know exactly what that spells for us in terms of pressure on prices, but it's not in the right direction.
Scott, are we more worried about the hog side of things because we have this concern with trade than we are, especially as we're seeing the beef side and ending stocks lower than we were a year ago?
Oh, so perhaps we are. I think in both cases, we'll get to talk about cattle numbers here in a minute, but just given the number of placements, I worry about where we end up in terms of beef production as well as pork production, and we have things like NAFTA that's still potentially set out there as unknowns on the trade front that might be more troubling for both meats. So I think we have a similar story. It's just right now, I think on the beef side, we've seen demand be a little stronger.
Cattle on feed came out today. You mentioned and brought up placements. Let's start first there. Where are we sitting, and what does this mean as we look ahead to the remainder of 2018?
Yeah, when you look at cattle placements, we were up 107.3 out of the numbers from USDA that we got here just a few minutes ago. That did stay within the pre-report trade estimate for the first time in a few months, but it continues to tell me that perhaps there's more cattle out there than we originally thought. When we started this increase, we were certainly suggesting that wheat pasture and lack of wheat pasture in some parts of the country had a lot to do with moving calves sooner than we otherwise would have to feed yards. So I certainly think you can attribute that for a period of time, but now given where we are, I just worry we got more cattle than we think we might have. And I think that certainly means for the remainder of 2018, we have a lot more pressure on prices as supplies may be a little bigger than we originally thought.
Anything else we're watching out of that cattle on feed report?
Well, I do think when you look at just on feed as of March 1, we're up 108.8 relative to a year ago. If you recall where we were last year at this time, we were pretty current and we were marketing a lot of cattle out of those feed yards pretty quickly. I think the currentness of those feed yards a year ago gave us much of the pop in prices that we saw for fed cattle in May, June. And where we sit today, we just aren't set up for that same kind of shortness in terms of cattle, market ready cattle. And I think that could certainly keep a lid on where prices go as we get in that May, June period relative to a year ago, especially.
Scott, as we wrap things up today, the big news, we've been alluding to it for a couple of weeks or quite a few weeks now, tariffs in China and what this means for trade was announced Thursday evening. China would put a 25% retaliatory tariff on U.S. pork. I will leave that up to you. I will let you go from there. What does this mean, especially as we're talking and we're seeing this slide in pork prices here?
Yeah, well, so I think we should start with China is certainly a top 5 market for us in terms of U.S. pork trade. So I do think it's important that, or I shouldn't say important, maybe perhaps problematic for where we go in terms of pork prices with them imposing a 25% tariff on our products. We just don't need this at a point in time where we've got abundant supplies of pork already. We're already seeing freezer stock start to grow there. So I do worry about what happens to pork markets in particular with this added bearish news that we got this week. However, I always think markets tend to overreact in the very short term to these kinds of announcements, and I'm not certain the fundamentals at the end of the day would suggest huge slides in prices. But again, I think much of where we go from this point forward depends on what everybody else does as well in terms of potential retaliatory tariffs on pork products in particular.
We know the global market is competitive. Do we worry about losing market share to countries in places like the EU?
Yeah, so I think we have to be a little bit worried. However, if you look at where EU pork prices have been so far in 2018, they've been well above U.S. prices. We've seen a lot more pressure here in the U.S. with the large supply increase that we've seen. So even with the 25% tariff, we may be a little more competitive than we normally would be, just given the large supplies that we have happening here in the U.S. So may not be quite as bad, but certainly anytime you talk about imposing an additional tariff relative to what other countries get in terms of access, you have to worry about that competitive position that we're in.
You talk about the fact that we have this large supply of pork here in the U.S. and this comes at a very inopportune time as we look at the supplies potentially increasing. We saw the announcement this week that Seaboard Triumph is going to increase its production. How does that weigh? And when we talk about the fact that we're increasing production and we need markets and market access for U.S. pork products.
Yeah, so number one, I'll say it's helpful in terms of shackle space. We'll take that additional shackle space that comes on board. I think that all else equal makes everyone bid a little harder for hogs. But unfortunately, on the other end of that plant, we have to deal with the pork that comes out, and we're only going to potentially grow pork supplies a little bit more as a result. So I again worry about the pork that we have to deal with as we go through the remainder of the year, and we'll just certainly take that added shackle space as a positive, I guess.
Scott, I want to talk a little bit on the input side of things. While soybeans have yet to be mentioned as a target for China, does that potentially, as we look at pork prices slide, does it help us on the input side if we see some spotting and some maybe attacks on the soybean market?
Yeah, if the Chinese were to decide they wanted to impose a tariff on U.S. soybeans, I think certainly it runs soybean and soybean product prices lower. It's interesting this week with all the discussion going on about tariffs, we actually got about a $10 a ton increase in soybean meal prices. So I actually moved in the other direction. But if they were to impose a tariff, that could reduce soybean meal prices. And, we're up $80, $90 a ton from where we started the year on soybean meal prices. That could be some of the help that the pork industry might like to see, despite its problematic for the soybean industry. So we might get a little bit of help there. I'm not certain whether the Chinese will think carefully about imposing tariffs on soybeans, just given the sheer volume of imports of soybean and products that occur there into China.
Anything else this week, Scott?
I think we've had a busy week, but I think we've covered a lot of it here this afternoon, Megan.
And next week, as we look ahead, quarterly hogs and pigs report comes out, as well as some other reports. Is there potential for the hog market to be able to take a sigh of relief as we look ahead to next week's report?
So certainly the preliminary information is we're going to have more sows out there as we look ahead, and really no inside of a reduction in sow inventory. So I'm hopeful we don't get too much of a bearish report out of quarterly hogs and pigs, but it's certainly going to suggest we got expansion still occurring.
And what other reports are we looking for next week?
Yes, we get a shot at planting intentions, so we'll see how much corn and soybeans we're going to plant here in the United States at the end of next week. I think that's important as we kind of think about corn and soybean meal prices ahead, as well as we get a little domestic demand information with the Restaurant Performance Index out next Friday.
And actually, we'll talk on Thursday. Friday is a holiday, correct? USDA holiday?
That's right. And we'll, in fact, get reports on next Thursday as well, Megan. You're correct about that.
All right. Good to see you this week. We'll talk to you next Thursday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.